Hi everyone, welcome to On Finance. And in this video, we're going to cover life cycle investing. So ano ba yung life cycle investing? First, we have to look at income and expense in relation to our age. Now, if you can recall, nung late 20s mo or early 30s, kaka-start mo palang mag-work, no? Yung expense mo, this red line here, is a little bit higher than your income. Meron kang cash shortage. And then what you do is that you mark, if you can recall, you mark the calendars for the number of days before and after your paycheck or next paycheck para at least magkaroon ka ng budgeting, di ba? And then um, here comes a very important, transition in our lives. Pagdating mo kasi ng, let's say, um, early 40s mo, nagkakaroon ng crossover yung income and expense. Now, this time, nagkakaroon ka na ng cash surplus or your income, the green line is now, higher or greater than your expenses. Now, the main reason is that yung career path mo dito or yung business mo is actually starting to expand or kung working ka naman, yung promotion, and then yung increase ng salaries mo and so on and so forth. So pagdating mo sa 40s, you will have this gap, this cash surplus, but you have to be careful. Kasi it's a very limited time. It could span only for, let's say, 15, 20 years. And after that, sa next stage natin, that will be our 50s, nagkakaroon ng another crossover. Okay? So this time, we are nearing to our, let's say, retirement age. Nagkakaroon tayo ng very much, consistent uh, expenses kasi nga meron na tayong maintenance, meron tayong specific lifestyle, and then yung income naman natin is, starting to decline. So probably pag retire ka na, yung income mo na lang or source ng cash mo would be from your pension or kung meron kang business or investment. So that actually cannot maintain the income that you have kung ano ba yung income mo way back, yung peak ng career mo or yung peak ng business operations mo. So you will have this, all of us will actually encounter this, curve in our lives in relation to income, expense, and time or our age. So what we can do to optimize this, this time frame here when our income started to really take over our expenses. So first, the early 30s mo, you really have to build your savings. It's all about financial discipline. You have to review your budget, and then you have to prioritize your needs over your wants. That's the only thing here. Kasi pag tingnan mo, kaya lang or baka lang masyadong mataas yung expenses mo dito kasi you're still confused about your priorities in terms of budgeting. It could be that you're uh, prioritizing wants instead of your needs. So baka lang ito yung cost ng excess expenses mo versus your income. So you have to do this during your 30s. Now, pagdating mo naman sa 40s mo, meron ka ng enough cash savings sa 30s. Pagdating mo naman dito, kasi meron ka ng surplus, you have to move from savings to investing. Okay? So savings and investing or investments are two different things. So meron tayong video discussion yan. I hope that you can go over with that. Here, you have to, load up to aggressive assets. Like for example, in this case, this is the sample portfolio. And if you're going to look at the diversification to, aggressive assets, bonds, and stocks are actually very high. In fact, your equity is around 50 plus 30, that's roughly 80% ng portfolio mo. And hindi lang siya peso, multi-currency. So again, because it's still, this early point here, and then sobrang tagal pa, you still have around around, let's say, 20, 25 years before you retire. So you have to optimize that time, that length of time, to invest in assets that are long term and aggressive, that can really give your income, a boost pagdating mo dito sa retirement age mo. Okay? And multi-currency, if you can, meron kang peso and dollar, if you have euro, so mas maganda. And then, pagdating mo dito banda sa late 40s mo, you can start, um, recomposing or restructuring your portfolio from your from your late 30s. So this time, pwede ka nang mag-unload some equities, and then you focus on medium-term bonds, and pwede ka na rin maglagay sa money market. So ang main reason is that we try to, control the volatility of your portfolio, because you're about to enter the age of 50s. Okay, so this is exactly a preparatory to your retirement. So in as much as possible, we try to reduce the volatility of your portfolio, and then focus only to one currency if you can. So kaya tayo dito, wala na siya masyadong equities. We build more on bonds or fixed income. That's roughly 80% of your portfolio. And when we move to, our 50s, eto naman yung story dito. Okay? We have to, focus on in short-term or intermediate investments or asset classes. So andyan yung short-term bonds and money market. So makikita mo, wala ka ng equities, wala ka ng long-term bonds, more on cash and readily cash na mga investments. Now, it's simply because pagdating mo dito, ang dami mo na expenses, no? Yung allowance for medicines mo, yung support for your lifestyle, let's say kung merong need yung family mo for cash, yung mga apo, or yung mga family members mo that really um, ask for cash assistance. So pwedeng-pwede mong ma-withdraw agad, mahatak yung mga investments mo na wala ng compromise sa capital. Okay? So very minimal na yung risk mo pagdating mo dito. So ang portfolio mo is actually focused on short-term debt instruments and money market. So roughly around 60% of that. So yung 40% na cash mo, so ito yung pwede mong hatakin in terms of, or in cases of emergency. Okay? Thank you very much for watching, and don't forget to like, share, and subscribe.